So this past Wednesday, I was putting on a webinar, and pretty much everything went wrong. I'm using a new software platform. And the first time I used it, I would say it probably performed 80% of what I thought it would. And so I said, 80% out of 100, let's give it another try. So I did another webinar this Wednesday, and it probably performed at 20% this time. So now I am going to get rid of that old webinar platform and go back to my GoToWebinar one, which I had before. But what's so interesting is how people react. So there were a few hundred people on the webinar, and it pretty much was going downhill from the beginning. And some people are like, "Hey, been there. We've all had new software not work. Good on you for trying new stuff. That's we appreciate that you're always looking for better ways." So there were a lot of those, but there were also the people who emailed saying, "Oh, this is a scam. You just fooled me to get on this webinar so you could, waste my time." I think about people's own beliefs, and when something happens to them, or there is something happening and they're involved in that, how a unhealthy personality could take it very, very, very personal, like this one woman did. Or a healthy personality could go, "Hey, you know what? We've been there. Totally sucks that happened to you. Sorry. I'm sure you'll figure out when you do. Please let me know because I really want to see that webinar." Like that's kind of a healthy way of looking at it. But what's interesting, one of the interesting things about being in this position, or this position that I'm in, is I get exposed to the unhealthy personalities and also the healthy personalities. And a lot of it has to do with what that person experiences when something's happening. And what I've noticed is the unhealthy personality takes a lot of things personally. And the healthy personality person is like, "Okay, this is happening. It may be happening to my account. It's not necessarily personal." And I've noticed over the last 16 years that healthy personality person, they seem to make much, much better decisions, not just about their investing in their portfolios and their 401ks, but just about life, about their family and their kids and business and health and relationships. So it was just funny to kind of experience that again. Hey everybody, this is RC Pack, and this is my weekend podcast. And the theme of this week is almost there. Now, there's a scene in the 1978 movie Star Wars where Luke Skywalker... Now, I think, now that I say this, I think it's Star Wars. I don't think it's Empire Strikes Back, where Luke Skywalker is supposed to destroy, now I forgot the big, huge moon-like thing that he was supposed to destroy. But anyway, he's supposed to destroy it. And, there's this scene where it's like, almost there, because he's got to get closer and closer and closer to the exact spot that he has to shoot his missiles at. And I kind of think of that scene sometimes with, having patience and waiting for, investments to set up. And I often in my head hear the Star Wars movie where it's either Luke Skywalker or another person in an X-Wing fighter is like, almost there, almost there. So with saying that, we are almost there with gold. And this conversation with you is about gold, and I have a lot of great price charts that I want to share with you. The first one you're looking at here is a price chart comparing precious metal mining shares with the S&P 500. And when this line goes up on this chart, that means gold mining shares are growing much faster than the S&P 500. And when the line falls, that means precious metal mining shares are falling in relationship to the S&P 500. And as you can see on here, this ratio peaked out in 2011. In fact, at the very end where we had the debt ceiling debacle within Congress, and right here you can see that When this line goes up, that means precious metal mining shares are doing better than the S&P, relatively speaking. And you can actually see that that was kind of the last peak. And since then, the S&P, since call it the end of 2011, has been outperforming precious metal mining shares for basically now about 3 years. So that trend looks like it just now broke down below this. It looked like maybe it stopped bottoming at the beginning of 2014, but now it looks like it's actually breaking down a little bit more. Now, do I think it's going to actually break down to this 2000 low? Probably not, but the relationship between which one is growing faster has broken down, and right now, again, HUI, or the precious metal mining shares, have broken down and are, relatively speaking, falling much faster than the S&P 500. So that's our first piece of data. Our second piece of data is just looking at precious metal mining shares in relationship to the price of gold. When you see this line go down, that means gold is performing better than precious metal mining shares. Now, they both could be falling, but gold is falling slower than the mining shares, the precious metal mining shares are. And when this line goes up, that means precious metal mining shares are moving up faster than gold. So as you can see, from almost the beginning of 2014, we've had precious metal mining shares moving up better than gold. And of course, we've had some corrections, and we're in another correction now. So the thing I'm watching for is, does the relationship between the precious metal mining shares and gold stay to where GDX, or the mining shares, are outperforming gold? And that's something I'm going to watch, because when we get back into the secular or cyclical part of the secular bull market in gold, we're going to see the mining shares outperform gold, which they've been doing since the beginning of December. But with this latest breakdown, we want to watch to see if this line actually breaks below June, the June low there, and that's something that I'm going to watch. Now look at this. This is just showing you the volatility difference between precious metal mining shares and the price of gold. So if you look at the screen, the price of gold is the black line, which is a much flatter cosine line that kind of moves up and down about 9%. And then you have the green line, which represents the precious metal mining shares, which moves about 30%. So as gold moves up and down 9%, you have the mining shares moving up and down, 330% more? Or for every 1%, precious metal mining shares are moving up or down 3%. And that's normal to see that type of volatility when something is bottoming. And we are in a bottoming formation of precious metal mining shares and gold. This next price chart is actually looking at the large cap precious metal mining shares and the small cap precious metal mining shares. And again, the green line on the screen is the large cap precious metal mining shares, or GDX. And the really teeny tiny precious metal mining shares is the black line. And you can see the black line's actually doing pretty good in relationship to the green line, or the small cap, the black line, is doing really, I think, pretty well, relatively speaking, in relationship to the green line, which is the large cap mining shares. Now, yes, they've both broken down, and yes, the small caps have fallen harder, but they also moved up harder. The thing I'm watching is, does the black line accelerate past the green line? Because if it doesn't, that gives us more data that the bottom is closer. If it does, that could mean that this is the final clean out, though I do think this is the final clean out, and that when you see the small cap accelerating past the large cap, that could be the final clean out. So I'm just watching the relationship of these two to see how they kind of act, well, in relationship to each other. Now, what I want to show you here is what actual type of mining shares are doing the best. So there's so many different types of precious metal mining shares, and I wanted to see, well, which ones are actually holding up the best? Is it exploratory companies? Is it producers? Is it large companies? Is it mid-sized companies? Is it small companies? Is it companies inside North America? Is it companies outside North America? And what I found is one specific type of precious metal mining company, and that is a royalty company. This is a company that gets paid on the royalties of every ounce mined. So basically, think of them kind of just like the VCs, the venture capitalists of the mining company. they give the money to the mining companies and they get a royalty for every ounce that is mined. And the black line is Franco-Nevada. And if you've been in my world for any amount of time, you've known that probably a year or two ago, I said if there's any one stock that you could buy and forget about within the precious metal mining, it's Franco-Nevada. It's such a well-run company. It's a royalty company. It's going to fall slower when the market, when the precious metal mining shares fall, and it's going to go higher when it goes up because it's leverage. It's a royalty company. So in fact, that's what we're seeing here. This is about an 11-month price chart. And you can see over that 11-month time period, the highs are getting higher for FNV, see them, and the lows are getting higher. Again, the black line for FNV. And over the last 11 months, Franco-Nevada is up about 15%, and precious metal mining shares over the exact same time period are down about, I'm going to call it 7%. So these royalty companies are doing much better, and if there's a type of precious metal company that you want to get into, it would be a royalty company, and FNV is one of them. The other company that I looked at was also a royalty company, Royal Gold, which is another royalty company, doing much better than Franco-Nevada. This is up about 37% over the last 11 months, while again, the precious metal mining sector itself is down about 7%. So royalty companies are doing much better than any other sort of precious metal company in the sector. So if that's something that's of interest to you to know which ones are holding up best, then you've got your answer here. And this is just what I love about price charts. They don't lie, and they give you exactly the data that the evidence is pointing to, not necessarily the data that you believe or you want to believe, but what is actually happening. The takeaway from this whole podcast this weekend is we are getting close to the final clean out in gold. There was the belief that I had that when the baton was getting handed from the Fed, or the central bank of the United States, the Fed, I knew that baton, that money printing baton, was going to get handed to Europe. And my belief was every other time there were major money printing events or currency events going on in the world over the last 3 years, gold got pushed down. That happened when the Swiss franc had to peg themselves to the euro because too many people were flooding the Swiss franc, and gold, that was actually when gold peaked. And so here we have the Fed finishing their $4 trillion, well, they built their balance sheet to $4 trillion. They're finishing out their last $15 billion money printing round in October, and the baton has been firmly handed to the European Central Bank, and they have started up the printing presses. I believe they have come up with basically around their first $1 billion of, they're calling them loans, but these are loans that will never get paid back, which is another way of saying money printing. And so it's my belief that when Europe starts printing their money the way the U.S. did, gold's going to have one final clean out. And I don't believe there's another major central bank in the world that's going to print, right? We had the US that printed, we got Europe that's printing, we got Japan that is printing now, but they've hugely printed. Now, all these countries have done it differently, and we've had China that's printing. China did it with a huge $20 trillion credit expansion. Japan is doing it with a collapse in their currency. The US did it with just straight money printing by buying bonds, and Europe is doing kind of the same thing via the buying bond money printing action. They're taking a chapter from Greenspan, Bernanke, and Yellen. So the takeaway is we've got this final clean out in front of us. The question is, will gold hold at $11.88? As I speak to you right now, gold's at about $1,215. Will the $1,188 hold? If it does, and there's huge amount of buying, this could be the final bottom, and it could be a triple bottom. But it'll be interesting to see if it does break through 1188. The next major support is about 1,050, and $50 below 1,050 is 1,000, and $1 below that is 999. And I would say there's probably an outside chance of it hitting 999. But if it does break below, if gold does break below 1188 with some velocity, then we could see this final clean out happening much quicker. And that's my hope. I'm not worried about the price. It's been this 3 years. We're in 3 years now of this downtrend. And no one said it was going to be easy to make money in gold, and this correction has been pretty difficult for a lot of people's psyche and emotion, and I completely understand. So stay tuned, because I'm watching the final clean out, and not that I actually know with 100% probability, but I will be looking to the charts to give an idea from a time point of view and a price point of view. Are we close to that final clean out? Hey everyone, this is really just another step in securing your money, securing your future, and securing your life. And until next time, this is RC Peck.